right. Well, Dan Reynolds, my longtime friend. We've known each other since yeah, elementary, no, junior high.
You're
Junior
high,
high.
bro. Yeah. Coming
Time.
up on what, 25 plus years, bro.
That's nuts, dude. Holy smoke. That's
I
pretty cool
know.
though.
Yeah.
I love seeing people that I grew up with just doing well.
Yeah.
Every time I see you, online or doing whatever, you're just doing big things. So I'm just like, yeah, man, get it.
I appreciate it, man. Yeah, I'm the same way. I mean, just got accepted on a house. Came on.
What? That a boy. Of course he
Done well.
is.
Done well. So yeah, that was exciting to see. We celebrated that for sure.
Where at?
Yeah. That's even more motivating for me, man. I'm like, man, when you see your friends win it, you just want to win with them. So,
No doubt. Yeah. That's, you surround yourself with those type of people and then, you bring each other up.
you don't realize
So
that when you're younger. You're like, oh, these are my friends. And then as you get older, sorry, my seat falls. So as you get older, then you realize there are people that don't have the same mindset goals. And, those people, unfortunately, you realize that you don't have time in your life for them anymore. So you'd be cool with them and all that kind of stuff. But yeah, it's like you want to be
arm's
focused
length.
on where you're trying to go, man. And, it's hard out here. And when you have negative energy or negative things holding you back, it really affects you. So,
100%. I
yeah.
agree. I mean, especially with these days in the media, social media, all that kind of stuff. Everything is just shock and awe, trying to scare, blah blah blah, bring people down, haters all over the place. So it's
It's
really
the
good to
worst.
yeah surround yourself to those type of people. And so yeah, I just really appreciate you coming on and
Absolutely.
surrounding coming and surrounding me.
Yeah. I love it. Let's do this.
Can you just maybe just start introduce yourself? Give me who you are, what you want, anything you want to tell people.
Yeah, I appreciate you. So my name is Daniel Reynolds. I'm a mortgage broker at Answer Home Loans. Just started there about 2 weeks ago. They are a top 10 brokerage in the country. So I'm super, super excited about the opportunity and very blessed. And yeah, it's just a path for me to keep going onward and upward. And yeah, as you know, I just to get the people and I played college football, played football with you in high school, junior college, and then out in Kansas had a 4 year. Love sports, love football, love basketball, love golf. That's what I try to keep myself busy with. And yeah, so I'm just trying to grind away, get better at my job, and help people get into houses. That's what I love.
Yeah, buddy. That's awesome. Well, now can you what was the company again? You said
Enter home loans.
Answer?
Enter home loans.
There it
Yeah.
is. Okay. Awesome. Perfect. I
Yes,
like the
sir.
shirt. That's clean.
Thank you. You gotta get me a team swag. That's the bit where I love it. I gotta rock it.
That's a great start. You know what I
Oh yeah.
mean? Like
Yeah.
things are looking up.
Yeah. I didn't get any shirts at the old spot. So yeah.
That's for sure. Hey, but it got you where you are today. So
It is, man. It's and I don't have, anything negative to say. It just wasn't a good fit for me anymore. You get to a point when you realize that. And I wouldn't be where I'm at without that opportunity for sure. And nothing but grateful for those experiences for sure. But like I said, very excited about the opportunity I have now.
yeah, that's awesome. So you actually officially probably start tomorrow then?
I started technically last week. I just took me, all week getting my account set up and then NFLF approved. And so it was just a process. Tomorrow is just the first business day where I get back after it. We have taken about a week to get everything going and stuff like
Yeah.
that.
Yeah, what's that process like, as far as, like, clients go? Do you lose a bunch of clients? Do you get to take them with you? I have no idea how that works.
Well, I mean, technically, I think companies always try to claim that they're their company clients, but every deal I did, I think, the 140 something deals I did the 3 years I was there, I think 5 of them were company referrals. I have a spreadsheet of all my clients. I update everybody. I'll send out the email and do all that kind of stuff. But yeah, I was able to close. My father closed on his first condo 2 weeks ago.
I thought I saw a picture. I thought I was like,
Yeah,
"His dad."
yeah, so now it's super exciting, and then once that closed, I left just so I can get my paycheck, and get out of there. I got one more deal that hasn't closed yet, unfortunately, so we're gonna see how that part goes when I get paid on that, but, yeah, so I got a couple of clients I'm actively, showing houses to, doing all that stuff, so I'm trying to get those out, and I got a couple of refinance opportunities that have popped up over the last week, so I'm trying to hopefully show some value there. But, yeah, other than that, it's just getting used to these systems and programs and all that kinda stuff. Yeah, they just my company Answer, it's a brokerage, first of all, so they broker everything. It's wholesale lending, but they did sign up with a company where I can do loans in every single state now. Yeah, it's like a partnership they created. It just happened. I just did my background check, so I'm gonna be licensed in every single state
Ah,
moving forward
for
after
you.
this week. I'm very excited about that.
That's
That's huge.
huge.
Yeah,
Yeah, that's
you
huge.
don't have to give up business. It's nice.
Yeah, absolutely, man. Good for
On the
you.
real side on us with the real estate side, let's say you're in Indiana. I have a client
Mm,
that goes out there, we can do a referral fee legally. Mortgage, it doesn't work like that. You cannot legally
Oh,
get paid out on a referral you send to another company. So that becomes, a little weird. And, for me, my background, man, it's taken me a lot to get where I'm at. And so I don't take any dumb risks like that. So,
right. It's not
but
worth
for
it.
me to be able to get this opportunity, super excited about it. Now I'm going to turn a few deals down and I'm ready to go.
Right on, man. So happy for you.
Thank you.
Hey, do you want to maybe expand on more about how or share with us your journey into becoming a mortgage broker? What sparked your interest in the field and what steps, kind of took to establish yourself to where you are now?
Yeah, absolutely. So first and foremost, I always do this. I give that love to the a gentleman named Jar Ripple. We were in a basketball league together. I was bartending at Black Agate full time and serving at BB's in the morning. So I'm working five days a week, two jobs. Still not making that much money, compared to what this business offers. But I was just trying to make as much money as I could for my family. And playing in the basketball league, Jar had been in the business for I think 20 years already. Just told me he thought I had what it took to be good at the job. So it was a risk. Stepped out of my comfort zone. I was super scared. I was not the studious type.
Mhm.
So, I have to go in and learn not only what's an interest rate, but, how does it all work? And then these federal guidelines that, it was a process. But yeah, he told me he thought I'd be good. So he got me a job at Paramount Equity Mortgage. And so I did that, bartended for 7 or 8 months just because I was nervous if I would stick with it or not. At that time, I'd been trying to find, I did Herbalife. I was trying to find something to make some money, right? And yeah, it was just a blessing. And so I did it. I took the leap of faith, failed the test a couple of times, give up, and the rest is history. But in terms of the steps I took, I was lucky that at that time, Paramount they had what's called a partner's office, which was like, me being a mortgage loan officer partnering with real estate agents. And they had what's called a direct office, which is like direct to consumer. So it's like a call center. So I was lucky enough that the opportunity they had, they hired you, they trained you, and then they trained you on the phones. And so I got everything in house. Now that model was not for me long term. You don't make any money in that model. The company makes all the money. They give you the leads. They take the majority of the cut. That's fine. But for me, it was awesome because it really helped me learn, actually what the business was. I had no experience. I had trying to do loans like as an assistant for a guy like in 2008. And before you even need a license, you just have to call people to try to refinance. I hated it. And so I never stuck with it. But then, come back to 2018. It was just a different mindset. And over time, like I progressed. And I was an assistant for 3 years and I was on my own. And then, yeah, here I am today. So it was a lot of steps, a lot of trust and hope that paid off.
Good for
Worked
you,
out.
bro. Honestly, that's I remember you going through all that, like when you were taking the test and stuff, and you're like, that is not easy. I'm
Hard,
like,
man. The worst part is, I was failing about one or two questions. So I'd get like a 73%, which means out of 130 questions, that's one more question, right? I got a 70, a 74, and a 72. And then I finally got an 81. And I was like, but yeah, man, it was quite the struggle. A lot of people that didn't pass my class actually got fired. For some reason, I was lucky enough to kept me. I don't know if it's because they believed in me or what, but
they saw
man,
something.
we started the original SEAL team. There's 25 plus people there. I think there's three that still do this today, 8
No
years later.
shit. Wow.
Three. And one of them is my buddy.
Really? That's
Yeah, he
cool.
was on my team at the last company. I believe he's going a different direction now, but the Chevy, man, he's a good buddy of mine. We met him and then I think one other guy. And
That's crazy. It must have
yeah.
felt so much better though, passing
Oh,
that test.
oh my gosh. I tell you what, bro, because in mortgage, how it works when you fail it, you got to wait 30 days, take it again. So I failed it three times. I had to wait 6 months after the third time. And so it's man,
It
you
made
ask me
you
if I
that's
meant to
terrible.
do this, is this for me? I just like I said, I was never a studious guy. Even if I could learn something, like test taking just is not my strength.
You
I can
go,
have a
brother.
conversation about it. I can talk to you about it, but taking it on a test, I just second guess myself too many times. This is the last time I passed. I finally had a technique where I'd cover the question, or sorry, cover the answers, read the question, read it again, read the answers, read the question with the answers. And it was
Woo!
135 questions. It took almost the full 3 hours, but I passed, and I tell you, I damn near cried. So
Good
it was
for you, bro. Tears of happiness, huh?
great.
Damn, that's crazy. I loved hearing that you fucking passed though when you did, because then it's just like now because you were just waiting because like you were already like you said just building up, doing all the kind of stuff that you all the stuff you could do without a license.
pretty much. And then at the time,
basically.
I was starting to get my own deals that I would bring to my loan officers that I was an assistant for, but they're making the money, and so
Yeah.
it's bringing business in, and obviously it helps me. I get bonuses based on deals I held at the time that close. So if I bring a deal in, it's cool. I got some, but it's not the same, man.
Yeah.
And
I
so
hear ya.
being so close, knowing I could do it at that point, I'm seeing progress. I'm seeing, we take steps to finally be able to do it. It was an amazing day for sure.
For you. No, can you just go off script a little bit? What's your, like, long-term goal? Is there a big plan, like, that you wanna get to?
You know, man, I've always kind of wanted to be a broker, but I'll say this company I'm at now, basically you are the broker. So the cool part is, I'm going to make the entire commission on the deal, and then I pay per file feedback to the broker. So it's very minimal cost the broker makes off me, which is more enticing as me running my own business. I actually control every aspect. Now, with that being said, I pay for my own credit reports. I pay for the loan program. All that stuff's now passed on to me. But as a self-employed person, those just write-offs and all that
Exactly.
kind of stuff. So now that
Yeah.
I'm in this platform, I don't know if I would, because you're inheriting a lot of risk when you do that. If I got a bunch of people working for me, let's say you hire some guy, he ends up going off, or gal, or
Okay.
whatever,
Yeah.
and then go off the deep end, then I'm held liable for that. And it's just the amount of money that you can lose in litigation, that kind of stuff is pretty high. So for now, I think I'm good where I'm at. I'm just trying to take my family to the next level and just be the best, agent broker I can be.
You man. That's cool. Yeah, it is a lot of risk that you take on becoming a broker.
Absolutely. And like I said, if I was at a different company and I wasn't making what I'm making now, it would be harder to keep that. But now that I'm basically in the broker,
Yeah.
um,
Without actually
for
having
all the
to.
risk, it's
Yeah,
amazing.
no brainer, actually.
No brainer, no brainer.
I love
Yeah.
hearing that. Yeah, that was kinda like my, getting started is I was like, was thinking about, "Oh, maybe I would wanna be a broker for real," as an agent, but at the same time, I was just like, all that risk. I watched my broker and it's just all the everybody relying on her and all this kind of stuff. I'm like, "Man, I don't wanna do that."
At least not now. Maybe
Oh,
I
yeah.
will. I
But
do people and I love helping people.
that's
So from that point of view, that could be something. And it's not, being a broker is all bad. I mean, every broker is probably pretty successful and lives in a great house. And you know what I mean? So it's not that the risk overweighs everything. It's just right now I'm in an opportunity where I can just focus on myself. And so for the foreseeable future, I'm going to stick with this model for sure.
look, good for you, bro.
Yeah.
From your perspective as a mortgage broker, what are some common misconceptions people have about mortgages, and what do you think is important for our listeners?
I think the biggest thing is younger clients, I would say. Well, let me start here. Older clients, I think that people are still kind of in shock from when the market crashed in '08. I wasn't involved in that business, but a lot of people are, they're just kind of thinking you're trying to take advantage of them. At those times, there was a lot of hidden fees, things like that were happening. And so the older clients I talk to are very wary of the process, but I try to do a great job with just detailing everything out, showing them on paper through an email, but then I'll send first, and then the stuff that, you get a loan estimate, it matches what I sent you. And so I think breaking those misconceptions from the older crowd, but then also the younger crowd, talking about, oh, well, the interest rates are high or this or that. It's well, you're renting and you're paying 100% interest right now. So I think those are the biggest misconceptions is from the older crowd are there still shady people in this business, which I'm sure there are, but it's a lot harder to be in the business now. Back in those days, you didn't even have to have a license. And so from that standpoint, I think that's part of the hardest part.
Got it. You didn't have to have a license back then?
No.
Wow.
Yeah, I
All
mean,
that.
they could
Well,
do
makes
what's called
sense because
stated
it was
income.
so.
I look like about
Yes,
Kevin,
that
I
stated.
make $1 million a year.
Yeah,
3 days
yeah,
later, I'm getting the keys. They didn't even
yeah,
check,
I know.
like, people are always think the market's gonna crash. It's nowhere near when it was at one time. So, yeah, I think that's just the biggest hurdle is trying to identify myself as somebody who does business the right way. Yeah.
Do you see yourself, like, explaining after now what we've gone through the pandemic? I call or what, we're calling them the U-Core years because it's not like anything else. So, people are, like, gonna be asking for those rates or looking for those rates, and it's like, you ain't gonna see those again.
Or that's when I laughed about if you think about it, everybody's situation is different, but recently I had a client and we're doing cash out to pay off debt. The rate was, 3.5%, but it was FHA. So when you factor in the mortgage insurance, your true interest rate's probably around 4.5%. because the mortgage insurance is just additional interest. That's how it is. But I'm talking to these people and they're saving $650 a month by refinancing and doubling their interest rate. That's how much debt they had.
Wow.
And so from that point of view, having to explain to them like the difference in the debt and like saving the net amount of money and you're paying 28% interest on this credit card that has a $9,000 balance, explaining all that kind of stuff. That's probably it.
That's
Yeah.
crazy. How did that one work out?
It was quite the battle. I closed it. We
Good.
had for an appraisal.
Cool.
I fought the appraisal. They didn't give it to us. I took it to a new lender. We got the appraisal. The appraisal came in $70,000 short. One company. A month later, it was $5,000 over what I put. So it's like, how does that even
Wow.
make sense?
Wow.
But then they were, it got a little weird at the end. I ended up closing it for them. But yeah,
Hey, you won. You closed.
we
All that
closed.
matters.
Yeah.
Right on. All right. So, what are some critical factors that you consider when advising clients on choosing the best mortgage plan? And how do these factors vary depending on individual circumstances?
Well, I think the biggest critical factors are what is your debt to income ratio and credit score? So right now, with rates being so high, conventional loans are almost dead to me. Even with great credit, your rate's going to suck. FHA recently lowered their mortgage insurance rate. Their mortgage insurance monthly payment is actually very comparable to what conventional could be if you have good credit, but the interest rates are about 1% better. When I look at someone's situation, how close is their debt to income ratio to the threshold of a conventional loan? Then B, what's their credit score? Because right now FHA is pricing out a lot better. And for the more people, more times than not, FHA is making more sense. So it really just depends on where your credit score is, how much money you got, income ratio. If you're putting 50% down, I'm not going to put you in an FHA loan because you're going to have mortgage insurance 50% down. But if you're putting 5% down or 3% down or whatever, then FHA might be the way to go. So it just depends on, where you're falling with that credit score and what the debt to income ratio looks like. Because FHA has a higher tolerance for a higher debt to income ratio.
So, when did they change that? And what's the threshold now for?
So it was 0.85%, and I
Uh,
believe it was April of 23.
yeah, it was
April
recent. I know that.
April of 23, and so it was at 0.85, now it's at 0.55.
Oh, wow.
So 30 basis points difference. The client that I had just explained on the refinance, we started at 0.85, and then I flipped them and got them to 0.55. It saved $225 a month on the payment.
That's big.
That's big, right? And yeah, I think that was April of 23, though, if I'm not mistaken.
Huh? Very cool. So, obviously, in your opinion, how has the real estate market changed over the years and how have these changes impact your role as a mortgage broker?
Well, what's crazy, so I joined the business 2015 as an assistant, and in those times, rates were in the low fours, high threes, pretty consistently. Of course, the year I got my license, rates shot up to over 5%. And so I've seen it now go from, 3.5, 5, 2, 8. I've seen pretty crazy in just 8 years alone, different types of market. One thing I would say is everybody's buying houses no matter what. People have to relocate for job. People just finally get to a point where they have enough money saved and the rates are higher, but hey, we're paying rent, so let's just buy anyway. So I think the biggest thing obviously is if you are a loan officer and you're dependent on refinances, that's not a good way to run your business. And so always be focused on the purchase market. And like I said, people are always buying houses. One thing I think it was Dave Ramsey. He said you marry the house and you date the rate. So don't worry about what the interest rate says. If you love the house and you can afford the payment, you buy it. And then when the market turns around, you refinance it, then you're in a better spot. Obviously, if you can't afford the payment, that doesn't apply. But if it's something that, we can handle this for a period of time, then, that's a great way to look at it because the best way to invest your money is in real estate. Over the long haul, you're going to get the most return on it. It's just a proven fact. Even when the market comes down, it goes back up. And so from that point of view, I would say if you could just focus on the purchase side and bring value and show that you know what you're doing, then, you'll get a steady form of business. And then, you know, for somebody like yourself, working with realtors, or I'm sorry, working with client as a realtor and myself, I'm showing houses now and I'm doing all that. Well, if I could build the rapport with the client when I'm showing them houses, I'm doing their home loan. I would hope that I've earned the business to come back and get the refinance when that time comes as well. So that's kind of how I look at it. But yeah, I would say if you could focus on the purchase part, you can navigate any market.
Great. That's awesome. And then, so would you also maybe agree the fact that, like, when people are so worried about that interest rate, it's just I always try to tell clients, like, don't it's always about your situation. It's
Right.
always 100%. If it's not a good time for you, then you should not buy regardless of the interest rate. Because
Right.
in my opinion, like, it's like your biggest one, if not the biggest purchase of your life. So,
Oh, it's the biggest.
yeah, yeah,
Versus
absolutely.
buying, Lamborghinis for 250K.
I know exactly. So, yeah, I just, I try to tell that to my clients because I feel like that's a huge deal, and then whenever I'm just talking to other people about interest rates, like, the market is the market, in my
Right.
opinion.
Well, that's probably true too. Like I just said, people, and typically it's the people who get hung up about interest rates who don't even own a house. And I'm
Exactly.
paying somebody else's mortgage, and you're complaining to me about, what an interest rate is. So yeah, I agree with that, and it's just, I don't know. I don't know how to handle those conversations sometimes without. Yeah, I
I
don't
know,
want to get
right?
frustrated, but it's man, I try to explain to you the situation, and people don't realize mortgage interest on the house is a tax write off. You now can write this off on your house, and so there's so many benefits that go into buying a house compared to renting that you're not able to get. And no one's ever going to tell you that because they would just want you to rent. So from that point of view, it's just different. But
I agree.
yeah,
So many benefits that aren't talked about that
I
and
would give it's one thing I wish I did back in high school is show us how do taxes work. How does
yeah.
buying a house work? Like, they don't give us any real life skills. Like, I could care less about how AZ divided by 6 times H2 works out. That doesn't mean anything to me. And that's why I
Yes.
didn't care about it in high school. I said, I don't, this doesn't make sense. I'm never going to use this. But yeah, if they taught people more life skills, I think people would be better right away out of high school.
And financial literacy, like, honestly, I
Exactly.
the value of a dollar, like, didn't know how to save money, like, I was so bad growing up, like, I just
Right.
felt like it was burning a hole in my pocket, and if I just
Yeah.
knew, like, how to save and, just talking about just even have the conversation, like, that wasn't even talked about when I was growing up. I was
Not
just
a lot, dude.
all
One
that.
time I went to the Niner game and I was leaving. They had these Niner accounts. All you gotta do is sign up for a credit card. I said, sweet. Maybe I was naive to it, but I just didn't understand the consequences of, the credit score at the time or not having to pay it off. And so stuff like that, man, I wish that it was just more readily available to people that are younger.
I
Because it took me a long time to get out of my situation that I know.
Yeah,
So,
me too. I had to
well,
file for BK at 27, we both
wow.
been through that shit.
Right.
But it goes to show that, you can still recover, like, just keep moving forward, keep your head
It's
up,
never too
like
late. Never
yeah,
too late.
and that's what bankruptcy's for. It's there to protect you, you get into those situations and, take 10 years for it to get off your credit, but luckily it happened when I was young, so
Right.
not off my credit, but anyway.
Right. Right. Right.
So crazy stuff. I agree. All right, so we're living in a world that is increasingly digital. Obviously, we're talking about that. Can you talk about the impact of technology on the mortgage industry, especially AI? I want your opinion in real estate as a whole. Kind of threw that out there. And then, how are brokers like yourself leveraging technology to better serve your clients?
Well, number one, I'm not super familiar with how the AI stuff's working. I don't think if I've used any programs with that. I mean, I know it's working, and I know like when you click on something or you say something, all of a sudden you're getting these ads for it. Like, I know it's there, but the AI part, but the technology been huge. For example, this we're used my lending program now. It's called Arrive. When I priced it out, there used to be something called Loan Sifter, where I would have to go into this program that had all the different lenders, and then you price it out. Well, now my loan program feeds that stuff eternally. So I could go, I'm setting up your file. Let's say you're buying a house, Kev. I'm setting up your file right now. I
Mhm.
can price it out. All of my top 20 lenders pop up. Bam. I pick the best scenario. I could have a digitalized application set up. It's in my email signature. That's from my loan program. I just hit copy paste, put in my signature. So if I send an email, hit apply now, it feeds it all back into my stuff. So that kind of stuff's game changing. I'm just implementing it though. I'm not going to lie. I was trained on the old school over the phone application. I like that because I'm building the rapport. I'm asking questions. I'm finding out about these people. So
Sure.
from that point of view, I'm a little stubborn on it, but in terms of the technology, man, it's just making the job and the process way easier. Um,
Yeah, you gotta embrace it. I mean,
yeah,
it's it's it's
it's gonna
it's
pack,
coming.
plus to be at this, like I said, but at the same time, what I could do now is they can hit the plot out. I can review it, call it, and then still go over it with them
There you
without
go.
having to do all the extra work myself. But yeah, there's just so many benefits to that kind of stuff. No,
I feel like it just saves you so much time to be able to focus on your clients and that kind of
right?
stuff.
It
Because
definitely
all
does.
that
Right.
mundane BS stuff that just had to be done, there's gonna be so many AI applications, or not just AI, but technology, software, whatever platforms that are gonna just streamline everything for not just brokers, but for real estate agents, for so many industries. I'm looking forward to it. I'm gonna embrace it like a mofo because honestly, it's gonna make our life so much better.
Right.
And I wanna figure out a way to make money with it too, you know?
Right.
But
Absolutely.
well, cool. Let's keep it moving. What is one piece of advice you would give to someone looking to purchase a property for the first time? And how does the mortgage factor into this advice?
Well, I'll say this now that I'm on the both sides of both. Before it was like realtors, talk to me, and then I'll refer you to the lender. I got to be honest. I think you got to talk to the lender first. Whether you have your own agent you work with or not, it's fine. But you have to talk to the lender. You have to have an understanding of where you need to start. There's tools I have my credit program where if we pull the credit, it's not where it needs to be. I could pay up these balances, pay this, pay that. It's going to give you a boost. There's so many factors that goes into a mortgage. So talking to a mortgage broker first, or hopefully a mortgage broker, but anybody in
Yeah.
finance, yeah, that's the important step. A, you figure out where do you want your payment? Like everybody goes, a lot of people on temporary, oh, I like this house. Okay, cool. Do you like this payment? No. Well, this house. And you need to establish there's a difference between what is your max pre-approval and what is your max payment you feel comfortable with. Like those things aren't always and so
Mm,
you might be approved for $1 million house because you make it, but you don't feel comfortable paying more than 3,000 a month for your payment. So then that would weed out, the level of where you're pre-approved. So for me, most importantly, getting approved, finding out where you're approved at, where you want your payment, what that price range is at that payment. Is my credit score good enough? Is it not good enough? What do I need to do to get my credit where I want it to be? And so there's so many little steps before that, before you even imagine looking at a house that need to be done. And sometimes they're all the client, everything's perfect. Good credit, make good money, 20% down. It's like the
got a
easiest y'all ever did.
good employment history, all that stuff.
Right. But typically that's not the case. I would just say, yeah, start with the mortgage broker, figuring out all the pieces of information right there. Where do you want your payment? That kind of stuff I just said, and then going from there.
I couldn't agree more. Honestly, even as a realtor, like people,
Well, the last thing you want to do, sorry to interrupt, is
yeah,
waste
you're
your
good.
time going houses without knowing what they're approved for.
Exactly.
Right.
And I've actually gotten to the point where I'll be blunt with them. Look, you need to go figure out what you can afford before we can even look. Like, I'm not going to waste your time. I'm not going to waste my time, and I'm not going to waste a mortgage broker's time, or I mean,
Right.
sorry, the listing agent's time.
Right.
That type of stuff.
Exactly. Yeah, there's
And
there's more sides though than just the loan and
just them, yeah,
hey, I'm calling you up. Did they call you back? Well, my client didn't qualify. Oh, it's like, why are you even
yeah. Why are
showing
you
the
wasting my
house?
time? Yeah, and
Right.
you only get burned a few times and realize that you don't want to keep doing that. So, like,
Right.
I've learned my lesson the hard way, and I've even told people like, "Hey, my broker doesn't allow me to go show properties without a pre-approval letter."
Right.
And
Yeah, you
yeah,
should.
yeah. Anyway, oh, give me your opinion about the California Dream for All program and how your experience and how that went down and still going
Well, number
on.
one, I didn't get to use it. I got a couple of leads on it as I think I got one or two leads on Friday. And then that Monday morning at 10, the funds were gone. I mean, hey, I'll start off. Hey, I can always appreciate them trying to generate opportunities for business, especially in this market. It's been tough. It's been challenging. I mean, go from averaging 5 to 6 deals a month to one deal. It's been challenging. So that Dream for All program allowed people to get excited again, get the market kind of going. But and on the at the same time, it kind of gave me a bait and switch kind of vibe because I've heard countless stories of people who were out showing houses, wrote an offer to find out, well, you're not getting 20% down anymore. Now you don't even qualify for that house. And so man, I've been literally basing everything I had off of this to get to this point to find out there's no more money left and I can't even buy it. So from that point of view, that sucked. Now it's hard to watch people go through that. But I mean, it's a cool opportunity, I guess. I didn't get to use it, but looking on the outside, I just, people that didn't get to use it, I'm sure they loved it. And it was a great opportunity. But yeah, it sucked for all the people out there who didn't get to use it. It's like, how are you going to have a limited amount of funds for this? I don't get how that works either.
Yeah, they didn't allocate crap for that. That's what I don't
No. Like when
understand.
you're going to offer 20% in the state of California, well, get what? Somebody in Los Angeles, that's 200K on $1 million. The conforming limit in Los Angeles is $900,000. That's just a normal house. In Sacramento, that's a two-bedroom, two-bath house, 1,500 square feet. Sacramento, you're gonna live in El Dorado Hills for that. And so
Yeah.
my point is, it should have been county specific because the down payments in those areas are the Bay Area. That's a
Right.
$2.2 million house. Well, guess what? Now that's a significant amount of money. And so that was pretty disappointing to see that how they manage those funds like that.
So for listeners that aren't aware, can you kind of explain what it was, the program was?
Yeah, so the Dream for Home program was basically it's a Cal HFA program. They have a pretty solid first time home buyer at 3.5% down. But basically, this specific program was they were granting you 20% down to buy a house. So it helps you keep your payment low, no PMI, all that kind of stuff. It was really a cool opportunity. But like I said, I don't know if they anticipated how that was gonna go and, with different counties having different loan amounts and stuff like that. But yeah, basically it's a grant program that was giving you the money to buy a house.
That's
I know
dope.
there's probably caveats within if you refinance within 3 years or things like that.
Oh, right.
Yeah, I didn't fully dive into all of it, honestly, like I said. It happened so fast, it was like
You
a
didn't get a
blur.
chance to, yeah.
No, I didn't get a chance. And so by the time I was getting ready to drop a podcast on it, Monday morning, I woke up, got an email, funds are gone. I said, "Oh, well, it's over, so screw it."
That was fun.
Uh,
Hopefully they
yeah.
bring it back.
Hopefully they do, and like I said, hopefully it's just maybe this is the practice run, and then they realize, okay, well, each city should allocate. I don't know. They're going to do better than what they did in terms of the county because, like I said, it's not fair. Somebody here, 20% at a $500,000 purchase. I think that's 80 grand. So that's different than somebody buying, a $1.5 million house where that's a couple $100,000, and so the
Oh,
funds
so
go really fast.
super fast. I wish we could see, like, where the numbers broke down, where,
Yeah, per
yeah,
county, I'm sure.
yeah,
I'll see if I can look into that. I'll send you whatever I find. But I bet they have.
they do. Yeah, they must have tracked that for
We got to
sure.
keep track of it somehow.
Yeah, yeah,
For
alright.
sure.
I'll try to look for it too. So I started a real estate investing company, a
Love
holding
it.
company, and then I formed an LLC. So I want to buy and hold, you know, I want to start with residential, but I wouldn't mind doing both and self-managing all the properties. But
Not about getting into property management. 'Cause that's a big revenue stream.
yeah. Oh, yeah. That's gonna be part of it for sure. And that's the only way I'll be able to qualify for small business loans. 'Cause any other real estate, I already talked to someone and it's like a nonprofit, kinda give you advice and stuff. And she was like, when I said real estate, she was like, "Oh, this and that, you can't do this, can't." And then when I was like, "Yeah, but we're gonna self-manage," and she goes, "Oh, actually, you do qualify," and put me through. I was like, "Sweet." So now I can talk to another person, I guess,
Yeah, you
but
press the right buttons.
I mean, that was a plan. So it's not just self-managing. I want to find a CTO with give 50% equity so that we can establish it's called automated machine learning. It's AI for almost every aspect of the company. Identifying properties, managing properties, you know what I mean, selling properties, all I mean, there's so many things you can do. And I don't know how to do it. I just know they can do that. So I'm
Right.
literally trying to find a partner right now. So anyway, I want to know if I can't get a small business loan. Do you do anything like business, like for investors and stuff, or is this all for
Yeah. Do
loans?
I have clients that are investors?
Yeah.
Of
Yeah.
course.
Okay, cool. I basically just want to buy properties with other people's money. That's all it comes down to. I
I
mean,
should.
what?
Out with that.
Yeah. I mean, what I need to do, what do you suggest I need to do? Do I need to come up with a certain amount of cash on my own or let's start off? Or do you think I can find a loan
Yeah, there's
out,
investor products out there. I would
Okay.
have to let me do some more research on that because I'm not quite sure. I haven't done it to where there's like multiple investors coming together. I've had people who just have their own money as investors and they have a portfolio. Or if you are basically what I would imagine, just kind of spitballing here, there probably need to be some sort of form of LC created.
That
Right. But I'm saying with these other partners and then,
Oh, right.
right. Cause if you're using their fund, like on investment purchases, you can't use gift funds. So we'd have to figure out how to navigate that part of it. But it's definitely true. I know people do it. So I just have to look into more. I'm just not super familiar with that particular process.
Yeah, let me know. I mean, it's no rush. This is just getting started. I was just finally just been like an idea of what I wanted to do for a long time. And then all of a sudden, these new clients of mine have been doing the same thing since '83, except for the no machine learning. And they're just a couple, but they're balling out living in Nevada.
What I'm realizing, Hut, is it's all about finding that residual income. So however you get there, that's all that matters. I mean, I don't want to be doing this for 50 years.
Yeah.
I'd like to be in a spot where 15, 20 years, my portfolio, I'm living off of that. So
Yeah, that's the ultimate goal for sure. Yeah, I mean, that's what I want to do. But at the same time, I don't see myself fully retiring from the field of real estate? Say, you
No,
know?
like mortgage loans are different, right? Like I have to
Yeah.
get mortgage loans, to hit numbers you want to hit. And that's why I got my real estate first of all, just to alleviate that. But mortgage loans, like it's like you have to take 10 applications and take, 8 credit pulls, and of the 8 credit, 4 applications, and of the 4 applications, you get one deal. And so mortgage side, it's a numbers game. Real estate side, you can just be hanging out doing something else.
If
Hey, I
you're
want to buy a house. I still do it. You know what I mean? So it's just different. I'm gonna be the same way. But yeah, it's just
Love it.
mortgage is a little more of a grind, if you will.
Yeah,
You probably hit
yeah.
the numbers you want to hit.
And that's I mean, it makes sense why they make you get your real estate license to become a mortgage broker, right? Isn't
No,
that what you said?
yeah,
You had to.
I had to get my real estate. I don't know why. I'll be
Yeah.
honest with you. I don't
I
know
mean,
why.
it
What's my
just makes
cat?
sense to kinda understand it
My cat just walked by.
oh, cat's name.
Memphis. Beep.
Hey, is
Oh,
there anything that you wanna plug? Anything that I missed? Anything that you wanna talk about that we missed?
no, I would just say that brokers save clients money if you're out there, wholesale. The way I view wholesale to kind of explain it is, we're like a Costco. And, the bank direct lenders, they're kind of like Bel Air. It's same product. Costco's giving you a big ass bag for the same price. Bel Air is giving you a little ass bag for the same price. So that's how I look at wholesale lending. So
Love it. I love it.
it's just we're going to save you money, more money. Broker, the hashtag brokers are better is for a reason.
100%.
So
Local
I would
brokers too.
local brokers for sure. But
Absolutely.
yeah, I would just say, one piece of advice I'd give is just, I would say shop around too. I'm not above myself to where I'm not going to tell. I wouldn't want someone to shop me so that they can see that I am the best.
So
Or
talk
not,
about
not the
that real
best.
quick.
You know what I mean? I can give them the best opportunity, and
Yeah.
mortgage brokers save you the most money. And I would just be open minded to exploring all possibilities.
And a lot of people don't even realize that they can shop around. Can you talk about that real quick? Do you get
Yeah.
a certain amount of
Uh,
time? How does it affect your credit? All that stuff.
well, I'll say this. So they changed the guidelines back when the market crashed. So people were shopping around, and every time they got the credit pull, they would ding them. Now there's about a 30 to 45-day window for you to have both people actually pull your credit where it doesn't affect you, allow you to shop. Because I mean, if we're just being transparent, you can never get pre-approved without your credit being checked. That's one of the biggest rebuttals I have. Well, I don't like this. And I go, okay, well, this is what I'll do. You give me your estimated score. I'll base everything off that. If one thing about what you tell me is wrong, this entire thing is going to be blown up. It could be better or worse. So as long as you're okay with it, that's fine. At the same time, if you want me to truly do my job the correct way, your credit pool, more times than not, people understand that they do it, but a lot of people think that if you do it, you can actually go as long as it's within that, like I said, that 30-day window, you can have both people check it. You won't get yanked like it used to be. But I would just say that come into the process open minded, know that you do need your credit checked. And if somebody like me, I'm not going to check your credit and just say you're done if you
Yeah.
don't qualify. I'm going to put a plan together. The most reward deals I've done are people who did not qualify, and then I help them get to a point where they qualified, and then they bought their first house. Those are the best deals because you're changing somebody's life forever. But I would just say for people like that, stay open minded and just know that's the process. And if you're truly serious about it, there's no way around it. It just is what it is.
But they can come to you and you'll be able to tell them exactly what they need to do to get
Exactly. We have
pre-approved.
what's called a what if simulator in my credit program. But let's say, for example, you had 5 credit cards all maxed out. I can adjust those balances and it'll say, if you did this, you could get these potential score increases. I've done that a handful of times. It's worked every time. So now it's not spot on. Like I'm like, you're going to be a 704.
Oh,
You don't
yeah.
number will be, but the point is it'll get you to a qualifying number that gets your feet to the house you want. So,
What's the qualifying number for FHA?
well, they go down. There's some companies that go down as low as 500. 50 is typically yeah, I mean, those are, you're putting more money down. You know,
You're
learn
good.
like that. They just require more money down. But the standard FHA 3.5% down goes down to 580. Conventional, I would not go into a conventional loan if you're really below 660, although the lowest score they accept is 620. But with rates being so high, those interest rates are crazy right now. So if you're at a 620, so I would go FHA on that. But yeah, FHA goes down to 580, but it's
All
still
right, cool.
5% now. Everything's a normal loan.
Ooh, cool. Right on. That's good to know.
Yeah,
Appreciate you breaking that down for me, man.
absolutely,
All right,
brother.
well, I think that about wraps it up. I
Yeah.
really
Yeah.
appreciate you
Wow,
coming
bro.
on, man, and I
Just
can't
remember, everybody. And for
Yeah,
help, little Dandy. Here we
it
go.
is. There you go. Hey, turn this to your
There we go.
left more. There you go,
There we
right
go.
there. There it is. Yes.
I like
Um,
it. Thanks for having me on, bro. This was fun.
no, yeah, I appreciate it. It was a really good time. I knew it would be a good time. You're always fun to talk to.
That sounded great, man. Thank you, brother. Appreciate
I
you.
appreciate Talk to you soon.